Hey, what's up, everyone? How you doing? How are you doing? Hope you're doing fine. Hello, Cuba. Hello, Patrick. Hello, Anne. Good morning. Where are you, Anne? Where are you? Pacific time, maybe? Hey, what's up, Luke? Hola, Omar. Hello, Sven. Hello, Sina. Tocayo. How you doing? Pizza Boy. Welcome, Pizza Boy. You you're the new kid on the block, right? Yeah, welcome to our family. Hola Alex, hola José Luis, hello Orlando, Orlando Rose. Where are you from, Orlando? I mean, Orlando is very Hispanic name, but I know a few guys here in Texas. They are Orlando, but they I mean they are American. So, uh, but you have Rose. So I don't know. I mean, just hola, hello, sayonara. Canada. Yeah. All right. Hello, Diane. How you doing? All right, guys. So, how was this morning? How was this morning for everyone? I hope that you had a nice trading session. Uh, for me, I had a small loss today. Small loss, but I mean, I'm very proud of my risk management today because my when I say small loss, it was like a $235 loss. So you know about my wins. So at $200 loss for the day. That's pretty much like break even for me. It's a McDonald's style loss. And anyway, I mean, I just stopped trading because I took three trades, one winner, two losses. But I think the third one was kind of chasing, so I just decided to stop and say, well, I mean, this happened, so let's be aware of my emotions, my mental state, and I just decided to stop trading for the morning. So $235 loss. That's nothing. That's nothing. So that's a very good example of how the risk reward planning can actually save your day. So I had one win, 2 hour, and I had two small losses, 1 hour. So break even for the day. All right. Hola, Gabriel. Hi, Diane. Huge loss. What the heck? Why huge loss? We only have allowed huge wins, small wins, break even, and small losses. No huge losses allowed. So this, we need to work on that, Diane. We need to work on that. Small win for Anne. That's good. Hey, Nathan, how you doing? So for you people in this community, I mean, for the ones in the Scarface community, well, you know Nathan. Nathan is he was my first moderator on the team when I was starting the moderation team for Tony's and Jack, Tony and Jack's community. Nathan was the first one to join the moderation team with me, and yesterday I had the pleasure to get to know him, to actually meet in Houston, him and his wonderful wife. They are a young couple, very nice. It was my pleasure, Nathan, to know you and your family. So thank you for calling me and make this happen. Um, Hello, Anne. Hi, Sakif. What was your initial trade? Today I made only SPY, both sides. I took two puts, one call. I'll show you. I'll show you. Luke, you had a nice win today on NQ. You were shorting NQ. Come on, Luke. Nice. See now, small loss, lesson learned. To follow indices and not play against them. Yeah, that I mean, that's kind of the playbook that I try to show you here, guys. I mean, identify the trend or direction from the indices, then look for the names that are moving on the same direction. That's gonna be way easier than just looking for the relative strength or relative weakness. No, just, I mean, first look for the names that are actually moving on the same direction, right? And then my third step on my playbook is looking for the ones with the relative strength or relative weakness, but they are moving on the same direction than the indices. And fourth entry criteria is having a visual related key level. I mean, if we need a pullback on the indices, then look for the one that is looking for a pullback. You know, so that's kind of my playbook here. Orlando, how do you stop overtrading doing more than 3 trades? What's best practice? Brother, you just close your broker. You just close your broker, and if you can, just step away from your desk. Step away from your desk. That's exactly what I did today. This morning I took 3 trades, and when I closed my third trade, it made me rest on the day. Again, it was a super small loss. I ended the day with $230 something loss, but I felt like I was chasing. I was looking for emotions instead of like actually watching the setups. So I just closed my broker, went to my kitchen, brewed some coffee, went to uh, I went out with my dog, came back, and then after that, like way more calm and relaxed. I came back to my desk and I say, well, I mean that was the day for me. So, but the first big step it's awareness. It's awareness. Who asked? Orlando. So the first huge step it's awareness. So once you see that you may spiral, you just stop. I mean, you need to stop. Hard stop. Close your broker. Step away. Take a breath. Take a deep breath. Go to the restroom. Wash your hand. Wash your face. Go to your kitchen. Pour some water. Brew some coffee, and then come back to your desk. But you will have fresh eyes to look to your charts. But yeah, the huge first step to stop spiral down, it's awareness. All right. So once I mean, if you need to ask, hey, how do I feel? I'm doing this good. If you need to ask, you just step away, because I mean, if you need to ask, that probably it's happening, right? Probably it's happening. Thank you, Nathan. Nice job, Patrick. You will show me, right? I will go over Palantir. You will show me. Cuba, you had a pretty nice day today. Took less risk on my entries and overall 100 gain with max 2 cons per trade. Homework did wonders to me. That's really nice. So Cuba, he's part of the Traders Lab. That's the premium community on Scarface, and we have a weekly performance coaching program session. And this, I think this week was amazing because we were talking about market cycles and how to prepare for market cycles so you can, react to every cycle on the chart, right? So usually I leave some homework, and Cuba is one of my most committed students. He's the one sending his homework mostly same day, but I mean really soon. Thank you, Cuba. So I'm really glad that this is working for you. Luke took short down to the gap fill. Yeah, nice. Orlando, $100 profit on AMD. Carlita, self-awareness. Yeah, I was actually chatting with Carla, and I was like, hey Carla, you know what? I'm chasing. I'm closing my position. This is a small loss for me, but I'm stepping away. And she was like, oh Neto, how you did it? How you did it? Self-awareness. Well, self-awareness. I mean, and this is not something that I gain like on with the the easy way. I actually had my few mistakes, more than a few. And so the experience and the pain, the scars on my mind are the ones that are letting me, be more aware of this kind of situation. All right. All right. So let's get started, guys. Let's get started with this Apple trade. Well, first, I don't know what happened. This is why I don't trust Apple. This is why I don't trust Apple. It came all the way to this previous day high, grabbed all the liquidity here, and then boom, huge drop, huge drop. So I like this 26 210.19 key level. This is a key level on the 15-minute chart. Do you want to see the 15-minute chart? Of course you do. Give me 1 second here. All right, 210.19. Look at this. This has been a huge key level on the 15-minute chart. It's kind of the center of this channel, right? It's kind of the center of this channel, this 210.19. So it broke this level, came back, retested this level, and look at this candle wick. Look at this candle wick. So it's huge reaction to this 210.19 or 210.20, let's say. And well, I really like this. I really like this. So once you reject this key level here, 210.19, look at this reaction. Look at this candle. This is the candles that I love, right? This is the candles that I love. It came back, retested this key level, and look at the reaction and rejection here. So if you open your position right in the next candle here, look at this. This is building market structure to the downside, despite this huge candle here. But this huge candle here, even when it was reclaiming or just just respecting, defending this opening price, well, look at this drop from the previous day high after grabbing all this liquidity here. So break, displacement, retest 210.19, and you can take the ride to the downside. So that was the first trade opportunity that I watched here on Apple. And well, I will manage my position like maybe right here, right? I mean, you don't want to be trapped on Apple, but let's say you ended cutting your position right here, 10.05. And then I was watching at this. So we just talked about this 210.19 key level on the 15-minute chart. How important was this? So first, nice rejection. Second, nice rejection. And these candles are actually closing below the key level. So here you can see this is kind of a head and shoulders here. This is kind of a head and shoulders here. Where on key level. So this is, I mean, I'm not a big fan of patterns. But these head and shoulders on key levels, those are the ones that I like. So if you draw your neckline right here, you may have take this trade here, but I know guys, this is not a break and retest. This is more like a breakout trade. But look at this, all the way to the opening price, it was a 1 to 2.9 risk reward ratio trade. And I'm assuming that you open your position right here, but you can actually, right when you break this 1 minute opening range, you are now on your opening area, right? So this thing, I mean, you may wait until you break this order block here or this neckline here, and you open your position. This is a one, at least this is a 1 to 3 reward rate trade. So I like this. And then look at this reaction here. Well, and let me tell you, look at look at the indices, how bearish the indices were going. So once we broke previous day high on SPY, that's the moment when you want to short everything, right? That's the moment when you want to short everything. So right here, you were watching this break, rejecting this previous day high. So you want to, right here, this is the exact time when you want to short everything, right? So if you were watching these head and shoulders on Apple and you were watching SPY on the break and coming back to yesterday range, this was a very nice trade. This was a very nice trade. So we had this bounce out of the opening price, and then I was watching this, the reclaim of this 210.19. 210.19. So we have this break and retest of this 210.19, and also, well, I mean, this was kind of the area, the the consolidation area here for the previous head and shoulders, right? So you had this break and retest of this 210.19 reclaim. So if you open your position right here and you were aiming to high of the day, well, this was a 1 to 2.4 2 points. Well, I mean, it was a super nice trade out of what, this 210.19 key level on the 15-minute chart. So this is everything that I watch on Apple. Let me go to the chat, guys, see if anyone took Apple trade. Diane, what do you think about using 15-minute fair value gaps for intraday zones? You know what? I don't know how to use it, and I'm not curious about it. I mean, I like the 1-minute chart and the 15-minute fair value gap for intraday zone. I don't know. Maybe for swings, maybe for different time frame plays. Not for me. So, what do you think? Well, it's a nice thing. It's a nice thing, not for me. I don't know how to use it, for being honest. I don't know how to use it. So I mean, I don't know if that's a good play. Max, I took 951 for a long position. 951 for a long position. This was a nice play. Yeah, this was a nice play, but it didn't work. So after you had this reaction on this 210.19, I will prefer this short position, just because now you are, like, failing to create a new high here. But yeah, I understand what you tried to do here. Something like this, right? Something like this. You were trying something like this, or at least to this previous day high. Yeah, just unfortunate this didn't work. You were stop out, what, 953? Orlando, 1 minute versus 2 minute for entry. Which one is better option? I'm learning more. I'm leaning more to 2 minute going forward. You know what? There's a few other communities that they use the 2 minute chart. Right now, I'm exploring one of those communities, and you know what? I kind of like it, but it feels different. I mean, my experience is with the 1 minute chart, so I'm more comfortable, like playing with the 1 minute, because I've seen that with the 2 minute chart, it looks more like break and retest, or break and hold. Instead of a break and retest, it looks more like a break and hold. So which one is better option? The best way to do it is the way that you feel more comfortable and you feel you are executing and performing better. So there's no one better than the other. It's just how well you feel with any of them. All right. So yeah, I mean, again, I see the 2 minute chart looking more like a break and hold instead of a break and retest. But uh, that's just how I see it, right? I mean, if you ask any other guys from that community, they will say like, "Oh, 1 minute is just, I mean, too noisy," and it may be. It just, I mean, I feel very comfortable doing this way. So again, Orlando, I think there's no one way better than the other. You just may need to identify which one fits better to your strategy and your personality, all right, and how skilled you are or how fast you execute your orders. um Hello, Deuce. Dian, I see that a fair value gap on the 15-minute chart on Nvidia was a strong supply zone today. I'll go to Nvidia in a minute, Dian. um Max, that was your intention, 953? Yeah, yeah. All right. All right. Yeah, I mean, I understand what you try here. This was a very nice break, displacement, and retest of this pre-market high. Second candle, it's, like confirming this move. But what was happening on the indices? They were, yeah, they were below the 5-minute opening chart, the 5-minute opening range right here. Look at this. SPY was 626.28. That's a 15-minute chart key level below the 5-minute opening range, and QQQ was right at the 5-minute opening range low. So I don't know. I mean, if you were following the indices for this, well, this is not the right context. If you were just following the price action here, uh, I don't know. Like this is a huge drop. This is a huge drop. But what I like from this play, Orlando, what I like from this play, I'm sorry, Max, it's that it went from key level to key level. I mean, from previous day high to pre-market high. I really like this one. But yeah, well, it just didn't work at that time, because look at this. Reclaim pre-market high, retest of this consolidation area, and boom. Where is it now? Well, it went all the way to 1190. To 1190. All right, so let's go to AMD, guys. AMD today, it had, microchips doing its thing. Microchips doing its thing today. So they pumped like really hard this morning, right at the open. So you had this nice break, displacement, and retest of the 5-minute opening range right here, 156.98. Well, 157. And look at this. If you open your position right here, 944, and you were aiming to this 158.65, that's a key level. That's a multiple touches key level on the daily chart. Look at this. This was a 1 to 2.07 risk reward rate trade. But this is something that I want to discuss here. So in terms of risk reward, well, of course you want to do this, but once you have your confirmation candle here, I mean, one way, or the best way to do it is, having your stop loss all the way to the bottom of that candle. But I mean, it may be, like closer to the level, or to the next candles here. And this way, I mean, you are actually having a way better risk reward. But I mean, it's just a different way to do it, or something to consider here. Because, for example, right here, you don't want to wait all the way to here to actually close or manage your position, right? I mean, if you are watching this 953 candle or this 954 candle, I mean, you are managing your position right here. Or maybe on this one, right? 956. But you are not waiting for this one. for sure, because right here you already watched this loss of momentum. You already watched this loss of momentum. You already watched the both indices were downtrending. So I mean, you want all of the context to be, on your side, and right here it's not. So you just close your position, and that's it. All right. And then after that, guys, I don't see anything here. I mean, I was liking this. Let me show you. Oh, I'm sorry. I'm sorry. I'm sorry. Uh, I was watching this thing here. Can you see? Can you see? I was thinking that they was building like higher lows, higher highs, and it may, suddenly explode. But we broke this channel here. We broke this channel here, and it was kind of flagging, right? I really thought that this was a bull flag, but no, it broke to the downside, and it consolidated. It's balancing. I mean, it has been balancing for the rest of the day. So that was my only play for AMD, or the only play that I was watching for AMD. So let me go to the chat again. Omar, hello, new here. Welcome, Omar. Still struggling to set up easily and fast the hard stop loss, or even if it's possible, hard stop loss on the underlying. Oh well, if you are playing options, Omar, if you are trading options, uh, it's hard. Well, I think it depends on your broker. I use Webull, and I work with TOS and IBKR, but I think you cannot have like a stop loss for options on the underlying chart. I mean, you need. I mean, it's just different. So what I do, and this is only my way to do it. This is only my way to do it. You should be doing your own thing. It's that, I mean, you can have a mental stop loss, and I know this might think like this might look like more dangerous, but actually this works way more times than it doesn't. Like sometimes the candle wicks on the underlying just come back to my entry point or to my invalidation level. Just the wick touches my level, but it just goes back to the same direction. So that's why I don't like the hard stop loss or fixed stop loss. And I used to be in a community where they were playing a different game, right? But they had this 10% stop loss rule, and it was working really nice. But because they were kind of scalping, and when I'm saying scalping, it was like most of their trades they ended in less than 2 minutes. So they were kind of scalping. So it was kind of a good strategy to have a hard stop loss. But if you are trading options like this, I think that you should have a mental stop loss, and if price goes beyond your invalidation level with the candle closure actually beyond your invalidation level, then you can stop out. But after that, I mean, or before that, I will think that you should be accepting your risk. If you are having a strong emotions about your stop loss, I think you may downsize, and you will try to, I mean, you will let your trades play out more, and it's going to be easier for you to hold or to actually let it play, right? So if you are feeling strong emotions about your stop loss, my recommendation is size down, so you can, I mean, be comfortable just watching your chart instead of like watching your stop loss, right? um IBKR. Yeah, yeah. I don't know. I mean, I don't know if there's an option or somehow to use it, the underlying price, to actually have a stop loss on options. I don't know if anyone here using IBKR that can give us some light on this topic, but I think you can't. I mean, just because they are different things, right? Um, Cuba AMD was the one with relative strength compared to QQQ and SPY. Yeah, yeah, yeah. It was just pumping so hard, right? But I mean, it just reached this 158.65 key level, multiple touches key level on the daily chart, and it just deflated. Uh okay. Hello, Eileen, Omar. Yeah, no, I don't think there's a way to do it, like like stopping your options contracts with the underlying. I don't. Well, but I don't know. You need to work on your psychology. Yeah, I mean, remember, guys. I mean, you should be risking whatever you are comfortable risking. So if you are feeling strong emotions about your stop loss, you should size down. You should size down. That's gonna fix 99% of your problems. All right. All right. Okay. So let's go to the next one. Amazon. Amazon here. Well, not sure if you have been watching my posts on the pre-market. So if you are on the Scarface community, and you can go to the admins trading floor channel. That's the place that where the moderators we use to share our trading ideas, and not just the announcements, but sometimes our trading ideas and how we manage our position. So I have been telling you guys 225, 226 on Amazon. So let's go take a look into Amazon here. Look at this. So we are in a very strong uptrend here, but remember, price cannot go just parabolic, right? It needs to slowly grinding, or well, this has nothing of slow, right? But I mean, if you can see here, this area here, this looks like a very crowded area, right? And not only from previous day. I mean, from last Friday. So this area here, 226, it was a very nice area to hold. And look at this. We actually had this reclaim and retest of what? 226. 226. So if you were watching this reaction here, reclaim 226, displacement, pull back, retest here, nice reaction right here, this could be your play for Amazon here. And as you can see, it went from key level to key level, external liquidity, pre-market high, and the 5-minute opening range. All right. So this is a play that I like on Amazon, but indices were super weak. So I didn't take it. But this was the one that I was watching. The hold of 226, the hold of 225, that area here, 225, 226, just as we say, 225, 226, this area here. Look how well it was holding, and it's still holding. So if you guys are looking for swings, I think if you aim 230, maybe 2 weeks out, this is your play. So it's holding very nicely, 226. It's holding very nicely to 26. It's building it. Look at this. It's building higher highs, higher lows. So once we break this 226.83 or 226.83, this is gonna fly to 230. So if you are watching for swings, I think this is a very good opportunity. This is a very good opportunity here. Or wait for the break of this 226.83. Break and hold for some swings, maybe 2 weeks out, 230. It's gonna be a piece of cake right there. If you are in 230 for Friday, it doesn't look possible. Yes, but because it's for this week, it's a weekly expiration. I mean, any pullback here, it's gonna harm your contract. So I will take 2 or 3 weeks out. 230. Look at this. I mean, let's go to the 4 hour. Look at this. This is kind of clear, right? But you need to stay alert of this area here. I mean, 228. I'm not saying this is gonna be a struggle for price, especially if it's fixing momentum right here. But look at this area here, right? So this area here, supply, strong supply. So you just need to be careful. So if you chose this week expiration, any pullback is gonna harm your contract's price like really hard. All right, so let's go to the next one. Nvidia here. Just as AMD, it started pushing high, really nice, but then it just dropped. And the good thing it's still above 167. Let's go to look at this. This Nvidia chart is just amazing. It's just amazing. Look at this gap, right? Look at this gap. It really gap up very nice after yesterday's news. So today is day one after news, right? Today is day one after news. So you gap up. You are balancing right here on this area 170s. So let's see if it holds, right? Let's see if it holds right here 170, 169. Let's see if it holds, because if it holds, this thing is going to 200 like very soon. Do you remember, guys, that I told you that I don't want to trade into all-time highs, and especially Nvidia, because I have shares in this? Well, this is why probably I didn't want to, to test my luck this morning. I was super happy with this gap up on Nvidia. I'm really printing with my shares right here. This is my heaviest position. This is my heaviest position on Nvidia, and I got them like summer last year. So go to your chart. Let me know if you like it. You also said enough is never enough. No. I'm all the time saying you should find where enough is enough. You know what? I'm not sure if I ever share a book recommendation, but I really like a book that it's The Psychology of Money by Morgan Housel. I was talking to Alejandro right here yesterday about this book. I really love it because it changed my way or my relationship with wealth, and not only about money but wealth and what wealth means for me. But my favorite chapter in that book, the Psychology of Money by Morgan Housel, but my My favorite chapter on that book, it's one that it's called Enough. And I'm not gonna be the one that that tells you the whole story. But guys, if you have the opportunity to buy this book, The Psychology of Money by Morgan Housel, please take it. Please buy it. Buy it now. Go to Amazon, buy that book, enjoy it by this weekend. And I don't remember what number that chapter is, but the chapter is named Enough. And that's the chapter that actually changed my trading. And it doesn't need to be I mean, the book is not about trading. Again, it's your relationship with wealth. But I mean, I'm building my wealth out of trading, right? But so that's why that chapter changed a lot of things on my trading journey. So if you can, please go buy that book. All right. And I should have an affiliate link for that book. I have recommended it like 100 times. So yeah. All right. So guys, so this is a very nice chart. So as you can see here, I draw a few order blocks here, but this is the kind of the most important order block here, because this was after the pump we came back, retested this 5 minute opening range, and then we kept dropping right here. But we had this one candle rule. Let's say it's a one candle rule. So I was drawing this order block here. So once we came down and reclaim, what is this number here, 170.50, yeah, this 170.50, with this reclaim here, I really like this break and retest of this order block here. And if you were aiming to high of the day here and you have your stop loss right at the bottom of these candles here, this was a very nice trade. And here you have relative strength and huge momentum, because if you can see here, indices were doing absolutely nothing. I mean, QQQ was kind of recovering, but look at the SPY. SPY was, just melting right there. So this was the one with relative strength after AMD at the market open. So I really like this break, displacement retest of this order block here. And again, this is why you need to be aware. This is why sometimes it's kind of difficult to start, to be watching too many names, because you miss these kind of opportunities, because you are not drawing order blocks on every name, on every pullback, right? So you just need to identify which ones are the important, or draw all of them and look for reactions right here, right? So I was watching this reaction here, and I really like this, because the risk reward was there. Even if I had a larger risk right here, like let's say 170.50, look at this, it was a 1 to 4 risk reward rated trade right here to high of the day. We swipe high of the day, rejected, and well, look at this, break and retest of 5 minute opening range, but this failed. And I think it was kind of obvious, because look at this, all this recovery from 169.40 to 172 in less than an hour. So and both indices looking very weak right here. So well, I mean, it was just enough for Nvidia, right? I should do a book club. That will be nice, right? That will be nice. That will be nice. You know what, guys? I'm gonna create a post on the YouTube channel, and I'm gonna name it like a book recommended trading book recommendation. So if you can go there and drop all of your recommendations. It doesn't need to be like, the trading in the zone and all these trading related books. If you have a good recommendation about something, it doesn't need to be like trading technical, but something about psychology, about performance or habits. That would be very nice. I also have another recommendation. Speaking of that, it's called Extreme Ownership. Extreme Ownership. That's a very nice book. Uh, yeah, Extreme Ownership by Joko Willink. That's a very nice book, and it doesn't have anything to do with trading. It's all about performance, but I mean not performance in a, like in a trading related way. It's a when you commit to something, you need to have ownership about everything. So you stop making excuses and you stop saying like, oh well, the market makers are the ones making me lose money, or oh come on, the coach didn't send the alert the right way, or oh come on, market is just playing me. No, no, no. You need to own your decisions. You need to own your routines. You need to own your preparation. So that other book, Extreme Ownership, nice, 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 nice. All right. So Cuba, this NVIDIA method that you show, it kind of does what I've noticed when we are in the consolidation phase on the overall markets. Tickers don't necessarily respect previous day high and low. Opening ranges the same way. Yeah, exactly. So that's why it's super important that you start reading market structure, right? If you understand market structure, not only on the 1 minute, because in the 1 minute it might look noisy, it might look messy, but I mean, if you start identifying market structure on different on different time frames, I really like the 15-minute chart. I really like the 15-minute chart because it it gives me a very good idea from the previous days, and I'm not swinging, I'm just day trading, so I don't need to know what the like what the trend for the year is. I mean, of course, I need to know if we are in an uptrend or downtrend, or but I mean, you can notice on the 15-minute chart, right? You can notice on the 15-minute chart. So having this awareness of the previous days can tell you how the market structure is. So if you have your higher time frames align with your smaller time frame plays, that's pure gold. That's pure gold, because I mean, you are not fighting the trend. You are actually just waiting for remember, well, you, Cuba, I mean, you were on my class yesterday. I was talking about the four ways, or the four market cycles, right? So it's uptrending, downtrending, and like balancing. Yeah, balancing and expansion, right? So like here, right? So right here, it's a consolidation, expansion, consolidation, expansion. So and that's I mean, that's the story all the time. So if you can identify the market cycle for the tech name, or the index that you are trading, that's gonna be fire. That's gonna be fire. Um, yes. Can we put YouTube links? You don't read. Well, that you are a millennial, right, DC? Just kidding. there's a lot of people that I mean they prefer the audiobooks or another kind of of lecture, but I like like physical books. The smell of a new book, that's something that I enjoy. uh Probably my age. I'm 42 years old, 42 years young. Yeah, but I like books. I don't like to read on the iPad or my computer. I like books because that way I can just drop my phone, disconnect from electronics, and you're older. Come on. Yeah, well, I know I might look older, but I'm just 42 years old. All right. Uh, Eileen, Jack's box video has helped me understand price action on structure a lot. I have left the box in my charts as a reminder. Yeah. Well, that's the other thing, right? I mean, I feel comfortable drawing lines and boxes just with the gaps, but there's a lot of people that instead of drawing lines, they draw zones, and it's just different. I mean, it's how you feel comfortable, right? But that's nice, Eileen. I mean, if you need like to see a broader area of reaction, that's perfect. I'm just fine with lines, but if you are doing it with boxes, that's really nice. All right, guys. So let's go to Tesla. Tesla was, as we said yesterday, textbook, right? So look at this. We were having a downtrend here, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and look at this textbook break, displacement retest of the 5-minute opening range. Look at this. This was a clear and nice break and retest of the 5-minute opening range, and also it was respecting this trend line here. It was respecting this trend line here. And if you want to do it something like this, I really love for the ones that are not on the Scarface community, we have another moderator. Her name is Lauren, and she draws a PYA line. This is the protect your assets line, or protect your ass, right? No, it's protect your assets line. So she draws these kind of lines, and once the trend is broken, she just manages her position, and I love it. I mean, it's one way to do it, right? So we had this break, displacement, and retest of this 5-minute opening range, but we also had this one on the 5-minute opening range low. So after looking at all these candle wicks, look at the reaction. Look at the sellers right here. Look at the sellers right here. Look, all these candle wicks with strong reactions to the downside. So this was the very first nice entry here for Tesla, but this second one is super clear. Clear risk to the top of these retesting candles, and clear objectives. So right here, I was aiming to 315, round number, strike number, psych number. But if you were aiming to this external liquidity, this is previous week high, 314.09. Look at this. This was a 1 to 6 risk reward rate to trade. But look at this. This is actually went all the way down to previous day low. This was a almost 1 to 9 risk reward rate to trade. This trade was amazing, and it was textbook right here. And well, what was happening on the indices? SPY, a few cents from low of the day, a few cents from breaking previous day high. I just love it. This is textbook, guys. This is textbook. Anyone took a Tesla trade today? How was Tesla looking? Would you trust a candle wick like this? Of course not, right? That's why you took this chart. Dizzy, you took Tesla. Talk to me. Entry, exits, stop loss. Dizzy, I have the last 3 days of highs and lows and price. It's fascinating how those prices get respected. I do like it. The 10 tickers. I do it to like 10 tickers. Just takes me a few minutes to update every day. Yeah, that's nice. DC 1030. Oh well, it's almost it's exactly this trade. It's exactly this trade, brother. So what you were aiming to 315, 314, previous day low. What is that you was watching for your target? And did you have this same stop loss 317.91? He's typing, giving you a few seconds here, DC. See if you can share your Tesla play. 1030 exit 71 high. Come on, guys. 71 highs. Holy smokes, 306? That was too far. Oh, 711. Oh, sorry, my bad. 314. That's nice. That's wow. That's a really nice. That's a really nice trade. So you did all these 1 to 6 reward rate to trade. Amazing. Good trade, DC. Congratulations about this. And your risk was this same level, right? 317.93. The top of these retesting candles. You marked 3 days of highs and lows. That's fine. I mean, that's perfect. EMA. All right. I don't use EMAs. I use SMA for my daily chart. That's the only place I use the SMAs. I don't use the EMAs or SMAs on any other chart, just the daily chart. It helps me create my thesis. All right. So this was Microsoft. This was Palantir. Someone asked me about Palantir. Who asked about Palantir, guys? Palantir. Patrick, Palantir win. Talk to me, Patrick. Yeah. Break and retest, previous day high. So you made to this one here. 1018, 1019. 1019. Nice. Tight stop loss, target high of the day. Scale must have had hell. Look at this. I was reading your mind, my friend. Yeah, this is perfect. This is nice break, displacement retest, previous day high. And you were looking for high of the day. This was a 1 to 2.7 risk reward rate to trade. Yeah, this looks nice, right? Look, this looks really nice. Congratulations about this, Patrick. So, stop loss. Look, this is something that I wanted to talk to you guys. If you can see here, stop loss is at the bottom of this retesting candle right here, because my entry here was, or the entry that I was proposing here was 1018. So I'm not sure who was asking about the hard stop loss, but look at this. If you have a hard stop loss right here, this candle is taking you out. This 1019 candle, or even this 1020 candle, is taking you out. But this trade, it's still on play, right? This is still respecting key levels. This has the same market structure, so this play is still valid. It's just you need to give it some room for breathing, right? You need to let it breathe. So if you were having a hard stop loss right here, you might be stop out on this candle. But if you're waiting for the actual candle close beyond your stop loss or invalidation level, well, you might survive this kind of price action, and more times than not, you will see your play develops. All right. Who was asking about this? Give me 1 second. I think it was Orlando. Or Max. Omar. All right. Okay, yeah. So can you see? I think Omar, this is one of the best examples about why you should not have hard stop loss on your options trades. I mean, because right here, as you can see, the trade is still valid. I mean, you are still playing this retest of the previous day high, this 149.57, but it's just waking to the key level, right? Waking, just touching your key level with the candle wicks. So if you have a hard stop loss, you are just stop out right here. But if you let it play, because it's not closing beyond your stop loss or invalidation level, well, it's still playing. And look at this. This actually hit its target. High of the day, it was at 1 to 2.7 risk reward ratio trade. So this is why I don't like hard stop losses. But again, this has everything to do with my personality, my risk tolerance, how I size my trades, how I read price action, and how much confidence I have on my setups. So again, you need to find a way to feel comfortable with your plays and fit your strategy into your personality and not the other way around. Because if you are trying to fit your personality into strategy, you need to change a lot of things, and some of them are strongly founded on your experience, on your life experience, on your money experience, and on your professional experience. So it's gonna be way harder to fit your personality into strategy. You need to find out a strategy that fits into your personality, and that's the performance coaching here. So that's just a recommendation that I have for you. Okay, guys, so that's everything that I have for you. It's 1 hour now. You know the drill, guys. Like the video, subscribe to the channel. We are 504 subscribers now. Thank you very much for all of you that have been liking the video, subscribing to the channel, and joining this live stream. And for all of you that you watch the recordings, thank you very much. And as you can see, I reply to all of your messages. So do not hesitate to leave a question, even if it's in a previous video, if it's in a previous session. And for you guys, I'm gonna create a post on the channel for books recommendations. I'm gonna drop my first 10 books trading related, and let's see if we can interact a bit more as a community. So guys, thank you very much for being here every day, all the time. This community is nothing without you. Thank you very much for everything. What was the name of the book? Which one? The first is The Psychology of Money by Morgan Housel. And the second one that I told you is Extreme Ownership by... Give me 1 second. Whoops. It's this one here, guys. Extreme Ownership by Jocko Willink and Leif Babin. How U.S. Navy SEALs Lead and Win. This book is amazing. This book is amazing. So you should give it a try. You should read it. All of them. 99% of the books that I buy are on Amazon in the United States. So I mean, they are kind of like really commercial things. So thank you very much, guys, and I will see you tomorrow. Bye.